we're looking at the absolute mechanics behind high-performing luxury short-term rentals. Look, if you're an investor or an owner scaling up to something like a massive 20-room, 40-guest boutique lodge, you already know that managing premium real estate requires a totally different playbook than your standard weekender rental. Today, we're dissecting elite asset governance, and specifically how top-tier operators plug the 3 invisible leaks that just silently drain revenue and cause massive host burnout. So ask yourself, did you buy a multi-million-dollar asset, or did you just accidentally buy yourself a 24/7 second job? It happens all the time. You acquire a 7-figure real estate asset for leverage, for status, for financial freedom, right? But without the proper infrastructure, it suddenly morphs into this exhausting around-the-clock nightmare where you're just constantly juggling logistical chaos. Industry insiders actually have a name for this. They call it the luxury ownership paradox. Here is our roadmap for today. We'll quickly frame up this luxury ownership paradox, and then we're going to solve it by plugging those 3 invisible leaks: the occupancy trap, physical entropy, and missed concierge upsells. Finally, we'll wrap up with the asset governance architecture that holds it all together. All right, part 1, the ownership paradox. It's the classic battle of an asset versus a 24/7 job. And this brilliantly illustrates the core issue. It is incredibly common for these large 20-room boutique estates to look like absolute effortless cash machines on paper. But behind the scenes, you're glued to your phone at 2 a.m. dealing with a broken AC. That right there is the fundamental difference between commodity hosting and elite asset governance. Commodity hosting is totally reactive. It relies on volume, constantly pushing to keep the calendar packed, and just scrambling when things inevitably break. Elite asset governance, though, that is a proactive, systemized approach. It's all about protecting your net operating income, your NOI, by treating your property as a unified, single investment platform that runs on strict, automated frameworks. So let's move to our first leak, Section 2, Leak 1, the occupancy trap and the fatal flaws of standard smart pricing. You know, there's a famous saying in the industry, occupancy is vanity, RevPAR is sanity. Your standard off-the-shelf pricing algorithms, they just want to fill your calendar, so they'll aggressively slash rates to do it. But elite governors, they enforce systemic whole lodge underwriting. They completely avoid fractional booking leakage by prioritizing entire estate buyouts for high net worth retreats or family offices. They set rigid baseline pricing floors that anchor the entire 40-guest property as a single asset, rather than risking massive wear and tear from bargain hunters just to fill a Tuesday. Instead of slashing those prices, they use advanced dynamic revenue allocation schemes to capture what we call micro-seasons. These are sudden, hyper-local demand windows. Think a regional biotech conference or even a sudden weather event. These advanced dynamically updating pricing servers automatically scale your room rates based on multi-guest occupancy layers. So when a group booking crosses, say, a 20-guest threshold, the system automatically adjusts ancillary amenity fees to capture that margin expansion fluidly. So what does this actually mean for your bottom line? Well, by deploying these advanced dynamic pricing servers, you completely move away from single-room consumer pricing. You fluidly expand your margins and absolutely insulate your net operating income. You're capturing margin expansion that standard commodity hosts miss entirely. All right, on to the next one, Section 3, Leak 2, Physical Entropy. This is the silent equity bleed. Look, luxury properties have massive, complex physical infrastructure. We're talking 20 rooms of high-end finishes. Without proactive monitoring, this infrastructure degrades incredibly fast. Elite governors execute what's called predictive mechanical lifecycle audits. They literally track precise utility hours for luxury spa mechanics, backup water filtration equipment, and central generators. They schedule professional service updates before the mechanical friction even occurs to maintain that pristine exit-ready standard. So the crucial point is, how do you actually implement this without being there? You do it by zoning centralized IoT sensor matrices throughout the property. Here's how it works. Step 1, non-invasive noise decibel monitors and smart climate gateways track environmental parameters across all the common pavilions and rooms. Step 2, automated layers dynamically adjust climate thresholds in unoccupied sectors of the lodge. And Step 3, this completely insulates your balance sheet from massive commercial utility leaks. You are neutralizing property friction without anyone ever entering the guest spaces. Then you have this huge entropy issue called micro-inventory entrapment. This is losing precious operational hours trying to track down misplaced high-value assets during tight turnovers. Elite teams beat this by requiring photograph-validated turnover manifests. Clean teams and fine inspectors actually have to complete multi-point visual manifests. Every single designer finish, high-end appliance, and premium linen layer across all 20 rooms must be photo verified and cloud synced before the access authority even resets for the incoming guest. But here's the thing, and let's playfully call it the squirrel paradox. You can API call a smart lock, but you absolutely cannot API call a squirrel stuffing walnuts into your HVAC vent. While software is incredibly powerful, you absolutely must blend digital tech with physical boundaries. You have to construct an institutional brand equity operations manual. This document codifies every operational script, every device API parameter, and every local vendor contract. It basically removes human error from the equation and structures your real estate for maximum institutional valuation. Moving right along, Section 4, Leak 3, Missed Concierge Upsells. Let's talk about in-home B2B. High net worth guests are fiercely intolerant of friction, you know this. So by forming secure commission channels with elite B2B partners, think local transit providers, private aviation handlers, and gourmet curators, you can capture deep ancillary revenue streams completely on autopilot. You seamlessly package these high-ticket local options directly into your pre-arrival sequences, providing this amazing emotional wow factor while you earn a commission. It's a huge win-win. A single automated upsell package converts a basic booking into a high-margin retreat. You're adding deep revenue streams to your bottom line fluidly, and here's the best part. You're doing it with absolutely zero extra physical wear and tear on your property. That is just smart business. Let's move to our final piece and see how this builds. Section 5, the asset governance architecture. To pull this whole shebang off, it requires transforming a standalone property into a high-performing, decentralized resort. Managing a 40-person capacity asset without permanent personnel dragging you down relies heavily on autonomous tech and specialized networks. Elite operators deploy fractional, multi-property managers. By sourcing specialized property directors on a per-rotation fractional model, you totally eliminate fixed operational overhead, and it keeps your internal personnel architecture super light and perfectly nimble, especially during those shoulder market seasons. And here is the core tech stack that actually acts as the operational glue to make this all possible. Your property management system API integrates cleanly with multi-point room locks. The exact millisecond a checkout code is processed, lock trigger dispatch arrays automatically coordinate vendor dispatches to your specialized housekeeping squads with absolutely zero administrative lag. You are completely insulated from the logistical chaos. The financial setup for this architecture is just fundamentally smarter. Think about it. Instead of a bloated, permanent, full-time payroll acting as a massive personnel drag, utilizing this per-rotation fractional model keeps your team agile. It perfectly aligns your operational overhead with your actual occupancy, ensuring that your financial success translates directly to your net profit. It's an incredibly powerful system. So, I'll leave you with this thought. We often think of luxury as, infinity pools and imported marble countertops. But what if the ultimate luxury amenity is simply the rational certainty, the absolute invisibility of the complex systems keeping the property perfect? It is definitely time to stop babysitting your building and start governing it like the high-yield institutional asset it was always meant to be. Thanks so much for joining me on this explainer today, and I really hope this framework helps you reclaim your time and absolutely optimize your portfolio.